Welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform, as well as running an educational company and swing trading full-time with my students. Now, what we speak about in this channel is order flow, multi-time frame analysis, and how you're supposed to be structuring your trading from a swing trading perspective and how to develop a good swing trading strategy. So as usual, I will be giving some multi-time frame analysis and be looking obviously at the order flow from hedge funds on pairs and basically explaining to you key concepts that you have to put in your strategy, that you have to implement in your own strategy. So without further ado, let's get straight in the video and provide free value for all of you. Okay, so there are a couple of things that I want to speak about in this video that are quite important when it comes to swing trading. So let's take USD CAD, okay, live market situation at the moment. And let's speak about basically how you're supposed to identify swing points in the market on higher time frames. Because by knowing the swing points on higher time frames, how they're supposed to develop, then you will be able to take, first of all, the direction of the market. And second of all, you will be able on lower time frames to then perfect your entries and actually understand how you're supposed to take the trades and where you're supposed to take profits. So you will be able to take high risk to reward positions by knowing the direction from the higher time frames. Now, for example, at the moment, let's analyze the swings that the market has created in this push to the downside. So for example, let's start from here, okay? What the market did. The market created a nice swing to the upside, made a retracement exactly to the previous resistance, not turn support, made another push to the upside, made a retracement to the previous resistance, turn support, made another push to the upside, then it broke structure to the downside and went for a retest of previous support, turn resistance here, made another swing to the downside, made a retracement. Around this area, we expect the market to basically start a new push to the downside. Now, in this case, we had some manipulations around this area, but overall the market did go for the push to the downside that it had to create. Then what happened? The market created this M formation, and obviously after an M formation, we expect the market to make a push to the upside. The market went for a retest of the previous high, and we definitely expect a push to the downside. Actually, we expect it up to here because obviously left shoulder, right shoulder, but obviously the market continued to the downside, and now we are at the previous high. Now, what do you expect from the previous high? You expect a reaction to the zone, and you expect the market to make a push to the downside. It's pretty clear. Now, where do you expect the market to make a push when it comes to the weekly time frame around this area? Where do you expect the market to actually stop? Where is the overall downside target? Well, it's here, right? This is the overall target to the downside that you want to see for USD CAD from this area, from the weekly time frame. Why? Because the market is rejecting exactly the previous high, and you want to see the market go possibly around this area, because if the market will go to this area, then what you will have inverted head and shoulders, and then the market can create a higher low, because at the moment from here, basically what we have a situation where the market is basically at a high, at the previous high, and 90% of the times the market will actually react to this kind of areas. And what we can see is that the market has already started to react to it. Now let's go down that we know our overall downside target. Let's go on the daily time frame and let's adjust that overall downside target. So going on the daily, what kind of situation we have now? First of all, let's take a look at the order flow. So what hedge funds are actually doing on a USD CAD. So let's look at what kind of data we have for it. Now, first of all, if we go on if we look at the net positions, we went from 31K and we are now at 17K net positions. So hedge funds have 17K net positions, specifically 29.9K longs and 12.8K shorts. And if we look at what we have actually 81.3% long exposure, which is quite high if you look at the past, because basically they have definitely increased their long exposure on the US dollar, which is something that definitely we can expect after all of this push to the upside. But if you look at the shorts, at the short exposure has increased as well, which is good for our pullback. And if you look at 17k net positions, is actually quite low respect to where we were at 31k net positions. So overall, USD can definitely get weak, at least in the short term, around this area. So from a USD perspective, we definitely have some good confluence for this short, considering the fact that with the last report, what we can see, they have added some longs, right? But they have added shorts as well, almost 1000 shorts. So if we go and see, basically put everything in relation, okay? So when did the data actually come out? The data, we have the data here, right? Now let's go down on the 4 hours and let's see how we can put that, how we can understand what is actually going on. So here they reported that basically they had added 1000 longs and, sorry, more than 1000 longs. They had added 1600 longs and they had basically opened also short. So after all of this push to the upside, okay, this push to the upside was given by 1600 longs opening, and as soon as the market made the push to the upside before reporting, they also reported that they had already started building their short positions.
Just a quick reminder, make sure you leave a comment below telling me basically which pair you would like me to analyze in the next video.
And what happened after that? What happened after that is that the market went in a nice position building pattern, okay? The market, as you can see, created a lot of sideways movement, slightly going to the upside. Now, this is a clear exhaustion, okay? The market is clearly creating some exhaustion here, and overall, it seems the positions are all built. Now, most of the times after it, we will actually get a manipulation, and then the real push to the downside will start. That is something that happens by time to time. It depends on basically how price action will develop here on the 4 hours, and it depends basically on whether or not they have already built order positions or they still need to grab some more liquidity, create some new liquidity to basically complete the filling all of their orders. So definitely from a USD perspective, we have good situation. They had added longs, they already started to add the shorts. Probably inside of this area, they definitely closed a lot of longs and started to add their shorts. So we can definitely expect a push to the downside from this area, which is something that we already expected from a weekly perspective. Now, from a technical perspective, what do we have here on the daily time frame is clearly an overextended W formation to the upside. And what we also want to see, we can adjust basically our target area by looking at the daily time frame, by realizing that this is a pretty strong area, right? This area here. So we definitely want to see the market hit this area if we want to take like the most conservative target zone, that we're actually supposed to take it here. Okay, this is like the most conservative target zone, the first area of support that the market will actually encounter in its way to the downside, which is this previous resistance here, now turns support. So let's take this as a first target to the downside. Now, if we look at it from a CAD perspective, there's where we basically have some negative confluence, because if you look at CAD, basically what you get is a situation in which with the last report, they reported that they had a closed 9k longs and opened 6k shorts. Now, obviously on the spot, all currencies are trading against the USD. So this is not CAD, this is actually CAD USD. So what you can see that CAD is actually getting weaker, okay, a lot weaker. So that is why basically USD CAD is struggling so much. But again, the position is of the fourth. So we have seen some position building. So definitely inside of this area, they could have easily started to buy CAD. Now, probably they have not finished to build up their position, so we might get a nice manipulation and then the push to the downside, which would be also better. But we will have to, that is something we will have to follow on the 4 hours and see the development that we get. So overall, yes, from a CAD perspective, we definitely have a negative confluence. We have 38.6 long exposure, 27.9% short exposure with the last report. At the 9k longs, closed 6k shorts. If you look at the net position, we went from 54k to 18k, and we overall at the moment have 48k shorts and 67k longs. So this is the situation that we have from a fundamental order flow perspective and basically technical perspective on USD CAD. How will we approach this with students for this trading week? Basically, what we will be doing, we will be monitoring price action inside of this area. waiting for the market to provide to us one of our valid entries. The market still didn't provide to us one of our valid entries. So as soon as the market will provide to us, and if the market will provide to us one of our valid entries, then we will definitely be taking this short, and this will be our first target to the downside. And as usual, guys, be reactive and not predictive. If the market satisfies all your rules for entry, then we can take the trade, and that is what we do with students. So if the market will provide to us all our rules for entry inside of this area, then we will definitely be taking this short. If not, we will not take this short. Why? Because it means that this situation on the CAD is actually way weaker than the USD, meaning that USD CAD is supposed to continue to the upside and break above this high. So it's key importance to monitor on the 4-hour time frame and wait to have an actual edge in the market. Everything that we just done up to now is for direction. Now we have to find the entry, and if the market wants to actually complete the patterns that we want to see complete from higher time frames. So definitely keep in mind that when you're developing a strategy, you have to take your directions from the monthly, weekly, and daily time frame, and then the entry on the 4-hour to perfect your entry, perfect your stop, and perfect your take profit.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more analysis and education for all of you, as well as going and checking out the mentorship program by clicking on the link below, because it's the best program that there is out there. You first get all the rules of my strategies, and then you trade them with me each and every day. I give you a new daily market breakdown showing you how you're supposed to apply the strategies in live market. Entry, stops, take profits, and all the rules for entry, all the reasoning, and how you are actually applying what you have learned to real-time market, as well as answering all your questions each and every day in video format, basically understanding and giving you the exact explanation. Now, if you're not going to check out the mentorship program, then go and check out the next video.